Wall Street was in full panic mode today. Stocks were crashing. Billions of dollars vanished in hours. And investors feared the market was about to spiral out of control. But then something unexpected happened. The market suddenly bounced back. Headlines everywhere started saying, "Stocks Pare losses." So what does that actually mean? Why did investors panic in the first place? And is another major crash still coming? Let's break it all down. Earlier today, the US stock market opened deep in the red. Major indexes like the Dow Jones, Nasdaq, and S&P 500 all dropped sharply. Big tech companies including Tesla, AMD, and Google lost value fast as fear spread across Wall Street. Investors were worried about rising inflation, higher interest rates, oil price spikes, and growing global uncertainty. As panic selling intensified, traders rushed to dump stocks before prices fell even further. But later in the day, financial headlines began using the phrase, "Stocks Pare losses." So what does that mean? In simple terms, it means the market recovered part of its earlier decline. For example, if a stock drops 10% in the morning but finishes the day down only 4%, it has pared its losses. The market was still down, but the panic started slowing. So why did stocks suddenly rebound? First, many investors believed the sell-off had become overdone. When stock prices fall too quickly, some traders see it as a buying opportunity. Second, positive economic signals helped calm the market. And third, large institutional investors started buying shares again, helping stabilize prices. That shift in confidence slowed the panic and pushed stocks higher. Technology stocks experienced some of the biggest swings today. Tesla and AMD moved sharply as traders reacted to uncertainty in the market. Energy companies also saw a major movement because of oil price volatility and global tensions. Meanwhile, some investors moved money into safer assets like gold, government bonds, and defensive stocks. This kind of behavior is common during periods of market fear. So, is the market finally stabilizing? Or could another crash still happen? The truth is, nobody knows for sure. Markets react quickly to inflation data, Federal Reserve decisions, and breaking global news. That means volatility could remain high in the days ahead. But one thing is clear, when fear takes over Wall Street, massive opportunities, and massive risks, appear at the same time. If you enjoyed this breakdown and want more simple finance videos like this, make sure to subscribe and turn on notifications.